Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis, episode 22 for week ending March 6, 2021. On Monday, markets rebounded as Tesla was up 6.4%, closing at 718.43. Tesla closed near its highs of the day as it moved back into the orange channel. The next hurdle it must overcome in order to regain its bullish momentum is to recapture that 50-day moving average at around 777. If we look at the RSI, it's coming close to retesting the downtrend line. If it could break out of this downtrend, Tesla could very well be on its way back up. On Tuesday, Tesla was down 4.5%, closing at 686.44. It's been bouncing in and out of that orange channel now for the past few days and trying to form a base of support. Also note that it formed somewhat of a small wedge going back to February 22nd as shown here. If we look at the MACD, you can see that the histogram is slowly rising from its lows of negative 22. This could imply that the momentum to the downside is slowing down. Also, the RSI has put in a higher low. However, it has yet to break out of that downtrend. If the histogram on the MACD can continue to rise towards zero, and if the RSI can break out of that downtrend, it would be a really bullish indicator. On Wednesday, Tesla was down another 4.8%, closing at 653.20. As you can see, it broke down from that wedge shown here in red. It tested resistance at the bottom of the orange channel at its intraday highs at around 700. However, it now appears that it wants to retest the bottom of the green channel at around 631. And if I adjust the green channel to the lows of November 16, I can identify the next potential support if that 631 level does not hold. The support falls at around 585. This 585 level is absolutely a critical level to hold because if it breaks below it, the uptrend that dates all the way back to December 2019 is in jeopardy. On Thursday, the market sell-off continues, taking Tesla down 4.9%, closing at 621.44. Tesla is coming close to testing support at the bottom of the green channel at around 580. I anticipated testing this 580 support level by the end of the trading week. On Friday, Tesla continues to fall as it dropped 3.8%, closing at 597.95. It broke down out of the green channel at its intraday lows touching 539 before bouncing back and closing within the green channel. The bottom of the green channel is absolutely a critical support level that must hold in order to maintain the uptrend. I don't see any major support levels that lie below this except for the 200-day moving average, which currently lies at around 474. On the bull side, if Tesla can maintain that uptrend within the green channel, the next major resistance would lie at around 685, which is the bottom of the orange channel. If it could break above that, the next major hurdle would be the 50-day moving average, which currently lies at around 775. So those are my price predictions for next week. Bull case, if it could hold above the bottom of the green channel at around 580, it'll move up to test resistance at around 685. And if it breaks above that, the next resistance will lie at around 775. Bear case, if the bottom of the green channel does not hold as support and it breaks below 580, the next support will fall at around 474. Now, on to Tesla news. India woos Tesla with offer of cheaper production costs than China. India is ready to offer incentives to ensure Tesla's cost of production would be less than in China if the car maker commits to making its electric vehicles in the South Asian country, says Transport Minister Nitin Gadkari. Gadkari said, rather than assembling the cars in India, they should make the entire product in the country by hiring local vendors. Then we can give higher concessions. He goes on to say, the government will make sure the production cost for Tesla will be the lowest when compared with the world, even China, when they start manufacturing their cars in India. India wants to boost local manufacturing of electric vehicles, batteries, and other components to cut costly imports and curb pollution in its major cities. India's fledgling EV market accounted for just 5,000 out of the total 2.4 million cars sold in the country last year, as negligible charging infrastructure and the high cost of EVs deterred buyers. So it'll be interesting to see if Tesla could attract buyers to the EV market despite the lack of charging infrastructure in India. Tesla's share of European EV market reduced to 3.5%. Tesla has seen a further year-over-year loss in its share of the European electric vehicle market as of January. Tesla saw 1,619 registrations of its battery electric vehicles in 18 key European markets in January this year, representing a market share of 3.5%. This marks a decline from Tesla's 1,977 registrations in January 2020 and a market share of more than 5%. Volkswagen remains the most popular battery electric vehicle group in Europe with 22% of the market share, as 10,193 of its vehicles were registered. The European market continues to see strong adoption of battery-powered electric vehicles and plug-in hybrid electric vehicles. European automakers are also increasingly shifting to the production of electric vehicles. Tesla had remained at the top of the European EV charts in 2019 by delivering more than 109,000 vehicles and claiming a 31% share of the region's electric vehicle market. But last year, Tesla fell behind brands of Volkswagen Group as well as the alliance between Renault, Nissan Motor, and Mitsubishi Motors. The company's market share fell sharply to 13%. In full self-driving news, Elon tweeted, "FSD beta build version 8.1 normally drives me around with no interventions. Next version is a big step change beyond that. Tesla is solving a major part of real-world AI. This is not widely known." This tweet was in response to Bogus Thought, who quoted Elon Musk in an interview in December 2020, where Musk stated, "I'm extremely confident that Tesla will have level 5 next year. Extremely confident, 100%. Billionaire investor Ron Barron's firm sold 1.8 million Tesla shares despite saying price will hit $2,000. Ron Barron sold 1.8 million shares of Tesla during the last 6 months for clients, despite believing the stock will increase $2,000 over the next 10 years. The key word here is for clients. Barron sold the shares because they were becoming too large a percentage of some portfolios. He stated, "It was painful selling every single share," adding that he personally has not sold any of his more than 1.1 million shares of the electric car maker. He also said that risk mitigation was appropriate for his clients regarding the sale of their shares of Tesla. It's important to clarify that Barron did in fact sell 1.8 million shares of Tesla. However, those were in respect to the funds that he manages for his clients. It's important to note that he's still holding on to his 1.1 million shares that he owns personally. As mentioned, the shares sold from the fund were just to mitigate risk for his clients, as they were becoming too large a percentage of some portfolios. And in my opinion, CNBC was trying to spin this news off as negative, stating that a large Tesla shareholder is trying to offload their shares despite having confidence in the company's future. Barron goes on to say that he plans to retain his shares for 10 years at least, and that he would be the last out. Speaking to the competition and all the up-and-coming EV automakers, Barron says, "If you think all these companies starting up are going to make it, I think it's a dream. I think it's astonishing they're getting so much capital." Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.